Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Friday, January 19th, 2024.
But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues. And check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever.
Let's take a look at the charts. Always like to start with the big picture to give you a sense of what the 3 to 5 week out to the 3 to 5 month time frame looks like directionally. We came off a month ago what had been a targeted long-term resistance area that is now at 256.06. Then in the low to mid 260s, this descending channel top coming off the July high of last year. Having tested it, one should allow for the upper 170s channel bottom as a 3 to 5 month objective. We're a full month into it and halfway there. And in fact, it was just less than a week ago that we settled below less than a week ago, below this near-term support, trend-defining support, combination channel bottom and 2/3 speed line that today is 226.11 and 227.50. It was the settlement below this structure that clearly indicated 177.75 as a 3 to 5 week downside objective. But once again, as I was mentioning while we were testing this channel top a month ago, that I'd mentioned that the market with channel dynamics, you should not discount the possibility of the upper 170s, so much so that you could act on it. In other words, when we were testing the low to mid 260s, I was mentioning possibly reaching for 180, 175 strike out of the money puts that don't expire for at least 6 months. And it was the settlement just less than a week ago that allowed, or actually, sort of indicated you could continue to reach for those out of the money put. They're pricier than they were a month ago, but still worth the trade. And so here we are, a bearish below 226.11 at 27.50 through February, expecting 177.75 over that time frame. On the way down, 194.07, a likely 2 to 3 week target. We may see that by the end of next week. That can contain weekly selling pressures. We just might bottom out here for more than a week, perhaps rally back to these line studies that are 26.11 and 27.50, and that would certainly extend the 177.75 target beyond 3 to 5 weeks, but it would still hold within the 3 to 5 months I'd mentioned while we were testing this channel top about a month ago. Let's take a look at the day itself. I have 217.84 as a daily resistance, able to contain session strength. And once tested, we could fall away. In fact, it is 217.84 and 202.80, the high of the low back in late October, that are the session containment levels, both of which are potentially in reach. 217.84, we're actually closer to it than we are 202.80. We have a lot of minor points in this area that are all very tradable for aggressive day traders. And when I say aggressive day traders, I'm talking for those who are looking beyond for just the trade of the day. They may be trading throughout the day, many times during the day, and I provide these minor points as something that one could trade off of if that is the case, if they are of that ilk, that's how they trade the markets. Now, 202.80, I don't know if we'll see this today, but we certainly could given present volatility, and if so, it can contain session weakness. And if settled below 202.80, we should then see within a matter of, I'm going to guess within 1 to 3 days, where is it? I don't have it labeled here. Yeah, the 194.07 low from late October, where once again we could bottom out through next week. So once again, closing today below 202.80, you should anticipate 194.07 within 1 to 2 days, where we could bottom out through next week. And of course, if we were to close below 194.07 over the next week or two, then we're just another week, two at the most, from testing our targeted upper 170s. You got 177 and a quarter as a long-term 5/8 Fibonacci off that January 23 low against the more recent July high. But it really is the descending channel structure that we're viewing as the objective, as viable support, reining in, pulling in the short positions you may have, and also going long at 177.75. That could be just buying Tesla stock, or it could be reaching for 240, 250 out of the money calls. And I say that because of this descending channel top. From here, we could round back up to the channel top within 2 to 3, 3 to 5 months of doing so. In fact, it is this channel structure that I'm using now as the line studies that are capable of quarterly containment. And given the settlement recently below 226.11, we are anticipating 177.75 by the end of February. So, in terms of, near-term investing, 2 to 3, 3 to 5 months out, it is still worth waiting for 177.75 before pulling that trigger. And then I think you can do so aggressively. Or if you're more of a 3 to 5 month, investor, and you're not given the opportunity to buy 177.75, then you're buying on strength with a weekly settlement above 256.06, which is not going to happen this week, and I don't think will happen between now and the end of February. Let's talk the upside here, actually. I'm going to go back to this chart here, and that is to say, well, pushing through 217.84 does signal 222.89, which is the extreme channel top, but closing above 217.84 would also be above Thursday's high of 217.45. And that closing above the high of the low is itself a buy signal. And I guess this is a long way for me to say that if we settle today above 217.84, expect within 1 to 2 days a return to the 226.11 to 227.50 region, where we can top out through February, and once again below which the 177 handle. This is probably not the right chart. There it is. The 177.75 formation remains a 3 to 5 week objective. If we were, and it's not going to happen today, but over the next week or so, settle back above 227.50, that does neutralize the 3 to 5 week sell signal. We should then, within 3 to 5 days, test 243.06, and within 1 to 2 weeks, push on up to the long-term channel top again at 256.06 and dropping weekly. So let me re-clarify that and say that one more time, that if we were to close above 227.50 and you recently got short the market, or you got short even in the 260s about a month ago, you may consider taking profits or liquidating that short position. Maybe you bought 180 or 175 out of the money puts some weeks ago, some days ago. If we close back above 227.50, I think it's probably good to cover those puts. And in fact, if you're a short-term swing trader and we close back above 227.50, you may reach for 250 or 255 strike out of the money calls that don't expire for at least a month. And once again, the last thing I will say is not unless we close above 256.06 do I see Tesla as worthy of pursuit over the 3 to 5 month time horizon and beyond. In other words, into later year, or unless we test 177.73. These are your 2 points, 177.73 to buy on weakness as we move into mid to later part of the year, or closing above 256.06 on strength. And then I think we're testing 350.77 within possibly 3 to 5 months, but I think that'll stretch out into later year as this formation converges in the summertime, late summer, with the 414.49 November 21 all-time high. Blah-diddy, blah-diddy, blah. There we are. I just said a lot. So I'm going to leave it at that. Please click like, share, subscribe. Check out wickedstocks.com. We put out a couple good stock picks this week. You can see them for free. For 5 days, you can see everything we do. Daily Triple Q, Daily SPY, so forth and so on, and our stock picks. And if you don't like what you see, you can bail out at no cost to you whatsoever. I'm going to leave it at that for Friday's test. I'll be back Sunday afternoon, of course, with Mondays. You have a great weekend.